Okay, so today we're going to take a look at the Bitcoin BCE strategy. Um, it's something I created with a friend. You will have never seen it anywhere else, ever. This is a great little kind of a scalping strategy almost. We'll go over the rules as usual, theory, and then we'll take a look at the charts. And we'll discuss the positives and the negatives of using this, and I hope you enjoy it. I think you will. I think this is something that you need to go back to the charts, take a look, practice, um, being able to identify the areas it works best in, the environments it works best in, following the rules, getting used to marking it out every day, okay, and then we'll get trading it, okay. So, rules: non-discretionary. Time frame: M5, 5 minutes, okay. Um, we mark the first M5 candle body only with the grey box. No wicks. So if you're aware of the session open, if you're an old trader of mine, or you're a newer trader, take a look at the market opens course, and you will see the session open in there. And also within the strategy course, we have, alongside this, we have the session open, how to trade the session open. With the session open, we mark the high and the low of the M5, first M5 candle, okay, at 7 a.m. My time, 7 a.m. So Tokyo open, which is 8 a.m. Tokyo. Slightly different to FX. Ideally, we look for a key high or low to be taken, whether it is a high or low that has formed after the open on the current day or a previous day high low. Okay, we'll go over that in the charts. Stop loss must be a minimum of $20 away from the break close entry or no trade. Okay, so if it's 5, 10, 15, no. Okay, not for us. Why? Because I have the data. I've gone over it for 2000, and I think the beginning of 2019. This was used, especially on the run up to 13k. It was used a few times. We made money from it, good money. We realized that most of the time, or high probability of the trade pushing away in our favor, whichever direction we would go in, generally happened when the opening range was more than $20. Okay. Max trades 2 per day, and only in Tokyo sessions. So if you take the short and you get stopped out, take the other side long. If it then stops you out again, that is the end. You come back tomorrow, okay? The wonderful thing about this strategy is there are 30 or 31 opportunities in the trading month to take it, okay? So we don't worry. We move on. We come back tomorrow. There's not always a trade, okay? Maybe there's only one or two a week, but the fascinating thing about this is the yield is incredibly high, okay? So you can have one or two a week, and I've seen trades go 10, 20R, and then you hit 2 or 3 days where you get stopped out, but by the end of the week, you're 20R. By the end of the month, you could be 80R up, okay? And of course, we'll come on to how we allocate risk to this in a moment, because we are not using standard 1, 2, 3R like we would on our swing trades, on our H1, or any other. Ideally, realistically, it's a little bit different to a normal trade setup, okay? Rules that are discretionary. Risk. Depending on our appetite and using our yield model to define targets, we can allocate consistent risk of either 0.1 to 0.5 per trade, max 2 trades per day. So generally speaking, okay, let's say, for example, there are 30 days in the trading month, okay, because obviously Bitcoin is 24/7. Let's just say it's a 30-day month. if I say, okay, I'm going to risk 1 hour per day on this, I know that that means if I lost every single trade twice a day, 30 days, that would be 30%. 30% of my account gone. Okay. So what we can do is we can use 0.1, 0.2. Okay. But ideally, I think top end, you should never risk more than 1 hour per day of your account. Okay. Over the 2 trades. Sometimes you'll only take 1 trade and it'll go 6 hour, right? But generally speaking, you want to really take care of your account using this strategy. And if you do, it's not about the returns over a week. You do this over a year. Trust me, when this trends, Bitcoin especially, the moves off the open in Tokyo, and if we're heading into a big bull run, I'm telling you, really, I've seen it myself. This can really increase your account size quite rapidly over time. Okay, so it's a strategy to have next to your main day trading strategies. Okay, it's just for the Tokyo session, in and out, leave it. Okay, targets, this is a low time frame in and out system, so targets are completely discretionary. I've had times where I've taken the trade, stopped out, boom, taken the other side, and it's just completely collapsed and gone 25 hours before I've even had an opportunity to take any profit. Okay. I've had other times it's collapsed, it's gone 8 hours, and then it's pulled back and I've closed at 3 hours. Okay, so it's very difficult because it's on the low time frames and because it's on the open in a particularly fast moving period of the trading day, which is Tokyo, when New York and London are closed. You can see some quick moves, but also some quick you can see some quick moves away in your favor, but it also could retrace in your direction and wipe out your profit. So it's all about being able to manage this for 1 or 2 hours, and I'm sure you'll see that in real time when you mark these out and keep an eye on it each morning. Okay, so let's take a look at the charts. So first chart we have is break and close. Okay, so you can see the blue line is the daily open. Okay, so what has happened? You can see how we've marked the grey box. Okay, the first M5 candle, the open and the close. Okay, so we're using the body. That is our range. Okay, so we stretch that across. So what happened? What happened initially? Okay, so you can see we had I've had these. Yeah, okay, so initially we had the move up, okay? Create a high, broke down, okay? And what you can see is the market created the daily range on the initial candle, okay? Pushed up, create a high, dropped back down, and you can see that the red candle that closes below the grey box, the first one that closes, break and close, okay? This is how you trade it. Entry is at market, okay? Break and close entry. Once you get that break, why didn't we take the initial green candle up to the high? Because we were looking for a high or low to form, and that was the high formed. Market moves in the opposite direction, closes, we enter. Where does the risk go? Entry at market. Risk is the you can see the R tool. The risk is the candle body. Okay, the open candle body, the grey box. Risk at the high, not the high of the day. We're trying to get in tight to increase the return. Okay, and the entry at market with a little bit of slippage On this one, you'd have probably got lucky because it did pull back for 2 candles. So you'd have gotten even tighter, okay? Target, prior day swing lows, normally good areas to anticipate the market wants to drive into. And as you can see, pushes away, okay? And this one went for, I don't know, I think it was about 3 or 4 hours. And that was on the 9th of April last month. So we're moving on. Now, this one's an interesting one, okay? So what can we see? Low forms off the open. Okay, so we had, this is a fairly tight opening M5 candle, okay? Significantly different to the previous one, right? The previous one was $30 odd. This one's very tight. I think it's only about $8 or something. Anyway, low forms off the open, then it pushes up, and then you can see the first green candle, break, close, entry, question mark. What is our non-discretionary rule? Has to be what? $25. Yeah? Because we're entering on the close of the M5 candle, and that close and our risk is below the grey, doesn't look like $25 to me, okay? And as you can see, if we entered at market and had our stop below the grey, only $8.5. No entry, okay? So rule is the break and close has to be $20 away minimum. This is 8.5, no trade. Look what happened. Market moved in the other direction. And then we had a break, close. How about an entry now? Well, this candle looks a bit bigger. The first red candle to close to the downside. We formed a low, formed a high, came back through the open, closed. Can we enter at market? What's the rule? $20. If you ended at market with your risk above the grey, that's 19.5. Rule is 20, but we're not going to argue about 0.5. With slippage, it would likely take a couple of dollars off anyway. Entry at market, risk above the high, target down to the left side, you can see. Prior days swing lows. And that is an ideal setup, okay? And you can see, one thing I notice is that it doesn't take long. So what did we have there? We had 1, 2, 3, 4, 5, 6, 7, 9, 10, 11, 12. The first hour, then it dropped back 25 minutes later. So an hour and 25 minutes into the Tokyo Open, we had a break and close. We got our entry, and now we're hoping for the market to move in our favor. What happens? It collapses. Okay, it collapses into the low. That would have went for 9 AR if you got out. If you didn't get out, it went for 25 or 26 AR. Okay, and that was on 10th of April last month. Okay, and this is in an accumulation area. When Bitcoin goes on a trend like it did last summer, if you go back on the charts and have a look, drop it to the M5, you'll be able to mark these out yourself and you'll be able to see it happening. So in a trending environment, if you can get a $20 to $25 risk, you only need the market to move $100 or $200 off the open. $100 off the open, you've got a 5-hour trade. Yeah. Okay, moves $300-$400, you've got yourself a 20-hour trade. If it completely collapses and you get a $1,000 move, who knows? Okay, but best thing for you to do is mark this out. Go back to the charts, mark this out, play around with it. Before even considering putting any money in, you want to mark it out, watch it in real time, okay? But for practice on how to mark it out, go back to the charts, okay? And go back to last year or any area you want, any particular month and practice, okay? And again, another example. So we had the green candle with the daily open. It moves away, creates a high, pulls back below, candle close, break, close, entry, risk above the candle body, the initial opening candle body. Market sells off 4 or 5 hour. Okay. As I said, targets are discretionary. Things like this, when we target the liquidity gaps or the prior day's lows or wherever we are close to. Every situation is different. I marked this one because I saw it I marked the green here because I saw it is ranged, and I'd have probably closed the trade after the initial expansion of volatility that pushed the market away. And then once we ranged, for me, I wouldn't have held it any longer, just in case it reversed. Okay, so as I said, it's a trading system that you need to sit and be with. Okay. Again, we had a red candle on the daily open, pushed away, created a low, took out the initial low. Okay, and then it pushed back up into the grey, and then 2 candles later closes above the grey, break, close, entry at market, risk below the low of the initial opening 5-minute candle's body. So the grey, entry anywhere around there at market. What did you get? If you could look to the right, you can see 659 was the risk, 6627 roughly was the entry, so around $60 or something, $60-$70 risk, and the market moves off, $400 or $500 move. Okay. Now, one of the things to keep in mind is sometimes with Bitcoin, what you'll see is on the first 5-minute candle, you'll get $100 or $200, $50, $60, $70, $80 candle, like this one. Okay, this one is only, I don't know what that is. No, is it 9879? This is about $150 candle on the M5. That's not for us, okay? And I'll tell you why that's not for us, because we use this to try and get in as tight as we can. That way, the move off the open only needs to be $100 for 5R, okay? $200. We don't want to start entering a trade whereby it doesn't fit our risk model, which, for us to get any value out of this at, say, 0.2R risk, it would need, with $150 stop, it needs to move $500-$600, which is a big move, just for us to get 3 or 4R. That is unlikely. So we're looking to get in tight. Okay. As always, any questions? Put any questions you have. Put them in the comment section below the video, and I hope you enjoy it. Get practicing, and make some money with it. Okay. Goodbye. Hey everybody. Okay, so today we're going to take a look at the Bitcoin BC